Hello traders, here's Jean-Pierre from UTC FX. Welcome back to our YouTube channel. In today's video, we are going to teach you the sniper entry technique which you can use to be profitable in financial market. Without delaying, let's meet after the disclaimer and the intro. Welcome back to our YouTube channel, UTC FX. Entering one of the powerful skills you're gonna need as a forex trader to become a profitable trader or a professional trader is to know when and how to enter into a trade. In today's video, we are going to show you one of the best ways you can use it to enter the market by using the engulfing candlestick patterns. Let's see what is engulfing candlestick patterns. The engulfing candlestick patterns, there's just a pattern, two bullish or bearish reversal candlestick pattern, which is formed by two candles after a decline or a divergence of a price. When this pattern occurs after decline of a market, it is known as the bearish bullish engulfing candlestick pattern, and when it happens after a divergence in price, it is called a bullish engulfing candlestick pattern. How can you recognize the engulfing candlestick patterns? Here there are three simple steps which you can use to recognize the engulfing candlestick patterns. Let's start with bullish engulfing candlestick patterns. The first candle has a bearish close, and the body of the second candle engulfs completely or covers the body of the first candle without considering the shadows, and the second candle have to close bullish, and this is known as bullish engulfing candlestick pattern. For bearish candlestick pattern, it is an opposite. The first candle, because we spot it at the close, at the advance of the price, the first candle has a bullish close, and the body of the second candle covers the body of the first candle completely without taking into consideration of shadows or wicks, and the second candle has to close bearish, and this is what is known as the bearish engulfing candlestick pattern. Here's the meaning behind the bullish engulfing candlestick pattern. The first candle, sellers are in control as if they close lower for the period. On the second candle, buyers stepped in and closed above the previous candle's high, which tells you that the buyers have won the battles for now. For bearish candlestick patterns, on the first candle, buyers took controls and take control of the market because the bearish close higher for the period, and the second candle, sellers stepped in and close below the previous candle lows, which tells you that the sellers has won the battle for now. Why do we need to know this, the meaning behind this candle? Because if you were in a buy trade and you spot a bearish engulfing candlestick pattern, you will need to step out of your trade, and if you are not in the trade, it will help you to time your entry. But even though this candlestick pattern is very powerful and entry to make money from a financial market, some beginner traders make mistake trading this forex, these candlestick patterns, and the common mistake that beginners traders do is trading candlestick bearish engulfing or bullish engulfing candlestick patterns in isolations without other confluences. We are going to give you some professional way to combine to trade engulfing candlestick pattern as well as any other candlestick pattern you may prefer. So the professional way of trading engulfing candlestick pattern as well as other candlestick patterns, it is to combine them with other confluences such as the support, resistance, trend line, Fibonacci level, moving average, indicators, to name a few. So we are going to show you some practical examples which you can use to combine them with engulfing candlestick pattern in order to make a profit in financial market. Note that these candlestick patterns and this concept works for all time frames from 1 minute to monthly time frames, but since you know that the lower time frame has tended to have many false signals, this concept really works better on the medium and higher time frame like 1 hour, 4 hour, daily, weekly, and monthly time frame. Now let's give you the practical examples on how you can use the bullish and bearish engulfing candlestick pattern in order to become profitable in the forex market or any financial market, since this trading approach works also on forex market, stock market, crypto, commodities. They can work in any financial market you might be trading online out there. Now you will need to follow 3 simple entry rules and exit rules. The rule number 1 will be to wait the candlestick pattern, the engulfing pattern for this case to complete. The rule number 2, you will set your entry above or below your entry candle after the pattern is completed. The stop loss will need to be set below or above the candlestick pattern, and the target profit could be set anywhere you want it depending on your trading style, but for this case we will use very risk to reward ratio of 2. Let's give you the first example, practical example you can use is to combine bullish candles, a bullish engulfing candlestick pattern with resistance. As you may see it, we are going to take an example on USD Japan yen on a daily time frame. You clearly see that this market was trending up. It was an uptrend, and then we had this nice support resistance which was broken, and you know that once a resistance is broken it turns into support, and then now we have the formation of a bullish engulfing candlestick pattern here. Now this is a signal that the buyers are willing to step into this market and continue to push the market higher. So you will put your buy stop above the pattern, and the stop loss will need to be pressed below your pattern, and the target for this case is going to be set at this to reward to risk ratio of 2. And you see that the market has pushed the buyers has pushed the market up and hit the target easily. The second technique of trading engulfing candlestick pattern, it is to combine them with resistance. And then this time let's use an example of Euro USD. You see that Euro USD was in distribution for a while here, and it has broken this support. And as you can see, there is a bearish engulfing candlestick pattern formations at this broken support which could carry the resistance. This is a good signal that the sellers are willing to continue pushing this market lower. As a professional trader, once you support this bearish engulfing candlestick pattern on resistance, you will need to set your sell stop below your entry, and the stop loss will be pressed a little bit above the candlestick formation patterns, and the target will be set at reward to risk ratio of 2 for this example. But as I said, you can set it according to your trading style, but you can use risk to reward ratio higher than 2, 1.5. You can trade your stop loss. You can use any techniques to set your target. So after you do this, all you have to do is wait and see what the market will do, and you see that the market has pushed it lower and then consolidated a bit, but it ended up by hitting our target. This is the second way, the professional way you can use the bearish and the bullish engulfing candlestick pattern to make money in the financial market. Another profitable professional trading style of engulfing candlestick patterns is to combine them with moving average. You can use any moving average of your preferences depending on your trading style, but for this example we are going to use a 50 exponential moving average. As you see that gold, it was trading in this channel, and now it is trending below the 50 moving average, and it formed bearish engulfing candlestick patterns. As a professional trader, you can set your entry below this pattern, your stop loss above, a little bit above the patterns, and your target will need to be set at risk to reward ratio of 2. And you see that our target has a confluence with this channel, and you see that after setting our target, the market has pushed lower and hit our target easily. Another professional techniques to trade engulfing candlestick patterns is the combination of engulfing patterns with a Fibonacci retracement level. Since the Fibonacci levels are universal levels, and they are traded by many professional traders, by combining engulfing candles with Fibonacci levels can make you a huge amount of money in the financial market. For this moment, for this time, let's take an example for Bitcoin on a daily time frame. You clearly said that this market was trending lower, and then buyers stepped in and pushed the price up and closed above this lower high. This is a good signal that the buyers are getting power and are getting control of this market. One of the way you can use to enter into this market, it is to set your Fibonacci tool on this initial impulsive move, and you see that the market has formed a bullish engulfing candlestick pattern at 50% Fibonacci retracement level of this impulsive move. 50% Fibonacci retracement level being one of the golden Fibonacci retracement level. Once it is combined with a bullish engulfing candlestick pattern here, it can give you enormous money in a financial market. What you have to do after spotting this confluence, you can set your buy above these candlestick patterns. Your stop loss could be set a little bit below the patterns or below the 61 Fibonacci retracement level, and the target will be set for this example at a reward to risk ratio of 2. You see that the market has pushed a little bit lower, but it ended up hitting our target easily. These are some of the best trading techniques of entry techniques of engulfing candlestick patterns. You can use one of these techniques, or you can even master all of them. But as you know, nothing it is certain in Forex or in the financial market. The only thing which is certain in the financial market, it is that nothing is certain. Therefore, we do recommend to backtest and demo trade these entry techniques before you apply them to your trading arsenal. And as we mentioned before, these trading techniques applies to both Forex, stock, crypto, commodities market, but this is not a holy grail, because nothing works well in the financial market. Always you will also need to apply the proper risk management in order to avoid losing a lot of money if things goes wrong, because that is one of the biggest mistake which beginners traders make. They found a trading strategy on YouTube or in a book, and they try to implement it immediately to the live trading. That is a good recipe to lose your money. To show that this concept will not work always, which will emphasize that you have to do a proper risk management. Let's take an example on the coffee. On a daily time frame, you see that coffee was trading, it is in uptrend currently because was making a series of higher highs and higher lows, and it is now trading above this nice support here, and as you see, it has formed a nice bullish engulfing candlestick pattern with a very huge momentum bull candle. So following our concept, this is where we need to pull the trigger and set the entry above the pattern and the stop loss below the pattern, and the target is set at a reward to risk ratio of 2. You see that the market has pushed up a bit in a profit and then pushed the lower, and it is about to hit our stop loss. So if you could not have made proper risk management, you could lose your money. Please, we advise you to backtest, to choose one of the best suitable approach among those we have shown you. Backtest it, demo trade it, and apply the proper risk management before you apply this concept on your live account. I hope you enjoyed this video, and if you enjoyed it, please comment below and tell us the concept which you would like to use in your future trading. And if you are new to our YouTube channel, please subscribe and hit the notification bell so that you will be notified once we upload the new video. And if you wish to run this trading concept, so if you want to master these entry techniques and more full trading strategies and details, please get notified that we are releasing very soon the second course bundle of our courses, which is money future trading courses. Here you can go to our website www.methodology.rw. It will be released by the beginning of October 2022, and we will teach you 7 trading strategies, technical analysis, candlestick patterns, indicators, and tools which will help you to analyze the market in a professional way. And we hope after completion of this trading course, we will be able to become a profitable trader. Let's see you next time, and may God be with you.